basically what we do is we identify some of the best investment locations throughout the United States. We build teams in those areas to either renovate or build houses, lease and professionally manage them, and then sell them to investors. So we bring turnkey investment properties in locations where we have confidence in and have teams established so people can easily scale or diversify their portfolio into some of these different markets that have attractive returns.
You found the Real Estate Law Podcast, because real estate is more than just pretty pictures, and law goes well beyond the paperwork and courtroom arguments. If you're a real estate professional or looking to build real estate expertise, then welcome to the conversation and discover more at realestatelawpodcast.com.
Welcome to the Real Estate Law Podcast. Thanks again for tuning in and listening to our episode that we have ahead, which is a really good one. And I'm not going to be talking that much because you could hear me with my scratchy voice, Rory. The benefit of our whole audience and you and our esteemed guest, Zach, you guys are going to be carrying this conversation, and you probably have more to say content-wise than I do anyway. So you're welcome.
Thanks, Jason. Thanks for ducking out of it a little bit, but that leaves me with the privilege to introduce our guest today, Zach Lemaster, who is the CEO and founder of Rent to Retirement, which is the world's largest turnkey provider of residential real estate investments. And I'm excited to speak with Zach and introduce him to our audience for a number of reasons, but in large part because I think his story resonates with me a little bit. He is a professional optometrist who found his path to wealth outside of the profession itself. So before I, incorrectly tell your whole story, Zach, welcome to the podcast.
Hey guys, thanks so much for having me, Rory, Jason. It's a pleasure to be here. And yeah, I think we got a lot of interesting topics to talk about.
I want to start with what resonates with me pretty specifically. As somebody who created a professional practice fairly young, I found, especially if you're not prepared for it, creating your own businesses can be financially draining, but also a very lonely experience. So I kind of want to ask you about your experience with that, and then how you transitioned from your earlier career into the real estate world.
Yeah, absolutely. And that's 100% true. I think most people that are interested in investing in real estate have that kind of entrepreneurial mindset. And the fact of the matter is, when you were building a real estate portfolio, even if it's one rental, you're building a business, right? And you need to approach it like a business. And one thing I found, though, is before I even transitioned from optometry into being full-time real estate, which was a big transition and hard to mentally get over after spending $500,000 on education over 8 years, and then just not even using that anymore, was just the fact that the way to think about money, I think, was a hard transition. There's so much in life. We have people that are willing to tell us their opinions about what to do and what not to do, and that won't work. And you're kind of swimming upstream a little bit when you're looking at going outside of the normal process of, and we're not taught about money, right? So anyone that's a Kiyosaki fan, I mean, that's 101, just how to think about money. But it was a kind of, it was a lonely path for a while, but I think also what's helped me be successful is surrounding myself with groups of communities of other people that are on that same journey. And sometimes it's hard to find those, but I mean, we've been investing in real estate for almost 15 years now. And I say me, like my wife and I and our company, but it started out in the Air Force. I spent 7 years in the Air Force as a captain, practicing optometry, and we invested that entire time. Even the first house we bought was a duplex, and just kept trading up every single year. And then we moved. I left the Air Force. We moved out to Colorado. We owned private practices and worked in optometry here. And then eventually we just got too busy with real estate, and we were able to replace our active income and go into full-time real estate. And that's kind of been the journey, but lots of ups and downs for sure.
Just to make a point, I want to ask about going to many, many years of professional higher education. When you were studying optometry, did they teach you about the business of optometry in school, or is that something you were forced to learn on your own after the fact?
We had one course that was one elective hour. It was even an elective hour, and I took it, but it was one business course, and I think we came up with. It was kind of a joke. We came up with our business name and mission and vision statement, and that was the extent of it. And what I found, and probably a lot of people can relate to this, especially in the healthcare world, like you're wearing multiple hats, right? If you're in private practice, you're a business owner and you're a physician, right? And you're seeing patients, and it's like not many people can be really good at both, and often we find people lacking in the business acumen. So the short answer is no, not much education there. Kind of school of hard knocks.
All right. And then for somebody who's had so much education, where did you get your business education and training on, growing your entrepreneurial endeavors?
That is real world experience 101. And, I continue, that's a lifelong journey, and I think that real estate is a really cool way to learn about business, because in real estate, just like many businesses, is such a relationship type of business. You really learn negotiations and how to, whether you're doing self management with your properties. We've just learned the hard way, but also the fun way. And now I have mentors in my sphere that I learn a lot from, that are far ahead of where I am and where I want to be.
Tell us a little bit about your first investments and how you started to kind of pivot your mindset into real estate as opposed to everything else.
Well, so back in the day, I think even in optometry school, I've always been interested in building businesses and doing something, just like getting ahead, and working hard to do that, and grinding. I mean, there was a point in time when I was in the Air Force, I actually had private practice clinics in town where I was, Tuesday, Thursday evenings, I was there seeing patients. Saturday, Sunday, I was 7 days a week, running that business as well as full time with the Air Force. And I was always just trying to hustle. And that's really served me well to get ahead. But in real estate, the same exact thing. I got the bug, I think, reading Rich Dad Poor Dad, we call it the Purple Bible. And then, bought our first, I used a VA loan, so no money down, on a duplex in North Dakota, and ended up, paying for the mortgage, just having a tenant in there. Moved out of that one, did it again, rinse and repeated, and just continued to scale that way and learn more and more. And then we got to the point where we started to invest strategically in other markets where we saw better opportunity, not just where we lived. And that's what allowed us to exponentially increase our portfolio and start making this a real business.
When did you consider yourself a real estate professional in relation to being an optometrist? Like, was there a time that you were both in your head, or early on in your career, were you an optometrist that did some real estate on the side, and then that kind of transitioned?
Yeah, it's probably, if you looked at a graph, it'd be something like this, you know what I mean, where there was a breaking point, and I left because I started. Eventually, I cut my work hours down to 4 days a week, 3 days, 2 days, 1 day is doing the optometry. And I've always hustled with real estate. It started out as a side hustle, which I think is such a cool thing, right? Like you can be a part-time professional investor, and work in your W-2 position or have multiple businesses in real estate. If you get it, once it's set up, it can be somewhat passive and you can continue to grow it. But I remember, same sort of thing. I always had rentals. I actually bought my first rental property before I even started practicing as an optometrist. And I was always doing that. And we eventually, one thing I tell people too is, Jason, is that we've bought more and more real estate, and going back about 15 years now, every single year we've bought more than the previous year. We've continued to scale. Mm-hmm. Sometimes that's hard. We have to raise private capital. We've gone through 1031 exchanges. Where we're buying millions of dollars of real estate every single year to just hold in our own portfolio. But there was times where I was, in lunch in between patients, making offers on properties and coordinating that stuff. Early morning, I would drive where I lived in North Dakota. The base was about 45 minutes away. And of course, winter storms, it could be an hour and a half sometimes commute. I was on the phone making offers, and stuff during that time. And I was utilizing that, but eventually it got to the point where it's like, hey, you got to choose a path and fully commit. And we chose real estate, and of course that's way more lucrative anyway. So,
that's an interesting question, Jason, because I've worked with a number of professionals who have had successful small practices or law practices or other endeavors, and they end up turning to real estate investments as their retirement in many cases, because either the education and getting the business started meant that they're later in life getting started with retirement planning, so they want to make up the difference, or they just look around and see that some of the traditional retirement accounts that are out there aren't necessarily the best opportunity if you're the employer and the employee themselves.
Mm-hmm. Can I make a comment about that also? Talk about identity and work. I mean, like
Yep.
work is so ingrained in all of our identities. Usually when you're meeting someone for the first time, you ask them, so what do you do? Right. And Zach, you went to school for optometry and then you served the country and you practiced that. I had a career before I called myself a real estate investor full time, but I'm still trying to get over that. Like, I remember, the pre-world, which was not that long ago, but I had that same transition where, 2016 is when we started investing on the side. And I'm still coming to terms with calling myself a real estate investor when people ask what I do, because I remember what I did. When people ask you that question, Zach, and I know that, with rent to retirement, you have a whole built out business. Do you start by saying that I'm a retired optometrist or still practicing optometrist, or like, how does that factor into your identity when you're meeting people like at a cocktail party?
We have young kids, so we don't get out to many cocktail parties. So, but I mean, in that introduction, I totally relate to the real estate aspect now. That wasn't always the case. And to your point, Jason, I mean, I was very proud to be an optometrist. It took a lot of time and work and education to get there. And I really enjoyed what we did. Like, I legitimately enjoy helping people see, because I have terrible vision and my optometrist was influential in my life. But now we practice on a volunteer basis and we have humanitarian missions, and like we can still do that passion, but it's not our sole focus. But there were so many people, my mother-in-law included, when I was like, okay, I'm going to leave optometry, and they're like, don't do that. That's not the safe route. And so it was kind of a tough transition. And but people ask you what you do and you're a real estate investor. It's like, what does that even mean? Right. Because there's so much to do in real estate. It's like, I have a hard time explaining that just briefly. So I'll just probably leave it at that I'm a real estate investor now. But
could you talk a little bit about what you do at Rent to Retirement? Because, when you go through the website, there's just so much information here. I was struck by the size of the team that you have, whether they're full-time or advisors. You've really built out a lot of different nooks and crannies of a full planning team. And I have heard some of your previous podcasts where you talk a lot about the value of long-term rentals and buy and hold strategy. So, talk a little bit about what the business is all about.
Absolutely. So our company, Rent to Retirement, we're a turnkey provider. That's one of those buzzwords out there that is kind of ill-defined. So basically what we do is we identify some of the best investment locations throughout the United States. We build teams in those areas to either renovate or build houses, lease and professionally manage them, and then sell them to investors. So we bring turnkey investment properties and locations where we have confidence in and have teams established so people can easily scale or diversify their portfolio into some of these different markets that have attractive returns. And we try to take a comprehensive approach into helping people build a business, because as we talked about in the beginning, this is a business when you're investing in real estate, especially diversified across the country. And so there's all sorts of ancillary things that come alongside that, as far as like the tax, the legal, the accounting, the financing side. There's all those things that you need to have in place to really make this a sustainable business model long term. And so we go through and offer the coaching and mentorship with our clients to build sustainable portfolios. We mainly do single family. I would say that's about the bulk, 70% of what we do, but we also have small and large multifamily. We do a lot of new build and development projects in areas that are in the path of progress. Hopefully that makes sense. That's my elevator pitch. So
no, that makes perfect sense. And I kind of just want to parse through some of that, a little bit, because you are, in many ways, you are curating a lot of the decisions that the potential investors have, down to which markets that you've vetted, which properties that you've vetted, and what repairs and work that you've prioritized in a property. When you're looking around the country, what markets speak to you as strong markets, and do they shift over time?
They're always dynamic. They're always changing. I mean, we have some like Midwestern markets, which are just like slow and steady bread and butter investment markets, right? I mean, those aren't going to have crazy appreciation. They're not going to be influenced by a housing correction too much. They're always going to have housing demand and rental. So those are your bread and butter $150,000 cash flowing properties that we own a ton of and we'll always like. But we also like to look for markets that are in the path of progress where you get appreciation potential as well. We want to be in areas that have landlord-friendly legislation. You guys probably know all about this, and the challenges with that. So we want to have favorable tax structures. We want to be in areas that have a diversity of industries, not just reliant on, say, oil or gas. We want to be in areas that have population growth, economic growth, have high rental ranges relative to home prices, so you can actually be positive cash flow, et cetera, et cetera. So with the markets we really like that I'm super excited about, probably Florida is our top market right now. In Florida, over this past year, just looking at 2022 statistics, had the highest percentage growth out of any state. Texas beat Florida in terms of population numbers, but percentage growth, Florida was number one. And we just like being in areas where there's just an undersupply of housing and a huge demand, because we know that it's just a safe place to be. So we've had exceptional returns, like sometimes over 50% over the past couple of years in some of our Florida markets. So we like the Sun Belt, in the path of progress, Texas, Carolinas, Alabama as well. And then the Midwest is just a nice place to have a consistent rental as well.
I mean, the past few years have brought us kind of one major change after another, and it's had some kind of interesting academic effects on a lot of the markets that are out there. Right now, as we sit in 2023, we're coming off of kind of a rapid rate in mortgage rates that has shaped everything that we do. It has had a lot of ripple effects across different markets. How is it changing your buy and hold strategy on behalf of your clients? The environment that we're in right now,
specifically around the interest rates.
Yeah, I mean, so the higher rates and the low inventory have made it, relatively difficult, particularly in our market, to find properties that are cash flowing with a mortgage on top of it. Has it impacted your business at all? Has it changed your processes at all or your markets?
Yeah, to some degree, of course. I mean, some people expected there to be this housing correction and drop, which we really haven't seen in most markets, at least not the markets we participate in, because again, supply and demand, it's just those are consistently strong markets. Obviously, higher interest rates, which in my opinion, this is necessary, right? Like everyone was living in this fantasy land over the past few years with historically low interest rates that we may never see again. They're artificially kept low, and at some point people use that as the norm, and it's not. So I think this is necessary to make this more of an even playing field for the market. But yeah, it's still challenging. There's still an undersupply in a lot of the areas, and cash flow is less. When you have a mortgage that could have been at 4 or 5%, now it's 6 or 7%, like the cash flow is less. So does that mean you need to change your underwriting criteria? Potentially. Do you need to put more money down? Potentially, yes. And so we've sharpened the pencil a little bit in terms of our offers and how we're underwriting properties. But the fundamentals of real estate really haven't changed. And, especially with the tax benefits that are still very attractive in this year, like they were last year, we're still seeing people be very active. If not, I mean, over the past 6 months, I would say on the tail end of 2022, people had a little bit of this fear factor of, oh, we don't know what's happening. And now they've maybe come to terms like, oh, now this is normal and this is what we expect. And, as long as you have a strategy in place and you're working with the right people in the right market, you can be successful in any cycle, right? And the people that are really successful in real estate, and the people that I get mentored by, they're always buying. They're not talking about, oh, interest rates are higher now. They're talking about, this is how I'm being successful right now, right? So we try to emulate that.
That's great. So, I kind of also want to let you give a little bit of pitch for kind of your segment of the business, and that being Turnkey. Why should a prospective investor look to a turnkey provider instead of kind of going out and doing everything on their own?
Yeah, I think there's a lot of benefits to Turnkey in terms of, and obviously I'm biased, this is our business, but most of our investors do not only buy properties with us. They see this fills a need and a demand to the level that they want to invest. And they're also going out and doing some of their own things. However, there are some people that are busy professionals that they like real estate and they have no interest in self-managing or, going through that. And so that serves a perfect niche for that. But Turnkey is a great option for people to, say, get started if they've never bought a property and they need some hand-holding. They want to avoid the common pitfalls and they want the education process throughout that. That's what we strive to offer, is the education for someone to be successful long term. Or if it's their first time investing out of state, if they simply just want to diversify across some of these areas, Turnkey is an easy way to do that versus having to build your own team from the ground up in an area, which is a huge lift and can have, a lot of challenges to do so. And also just people that want to scale quicker. They want to acquire more properties. They are full-time investors and they just, they're doing what they're doing. And then, but they want to still put their money into real estate assets in these markets and just buy more property. So those are kind of, I think, the demographics of people that we often see come through the turnkey space.
Okay. And, I'd be remiss if I didn't ask a little bit more in depth about why we real estate investors do all this in the first place. And, the words that come to mind are, financial independence and retirement. But those terms mean a lot of different things to a lot of different people. And since you work with people to bring them toward financial independence into retirement, would you mind taking a crack at defining those for us?
Yeah, and I'll try to define them actually with a financial picture and exact numbers, because first of all, I'll say that real estate investing, at least in my opinion, is a lifelong journey. And ideally something that if we leave as a legacy, right? Not only we're talking about generational wealth with legacy financially, but legacy in terms of education and tools and resources for, the people behind us that we want to leave in a better place. And that's why we're passionate about real estate. And that's why we're in this business. I don't need to be working in this business today, but I enjoy helping people accomplish their goals and see the light and be successful in real estate. But most of the time there's different levels of like retirement per se. And a lot of us, this is a foreign subject. Initially, it's just like, oh, I want to pay my expenses, right? So that's whatever that is, $3,000 to $5,000 a month. Like that's the first goal I want to get to. And sometimes your mind doesn't allow you to think past that until you reach that goal. And then from there, it's the next step of retirement, which is or financial independence, which is replacing your active income through rental real estate. And this could be being an active investor or through passive real estate. We try to look at building a passive portfolio. Otherwise, you're just trading one job for the other. And so that's, the most common number we hear is $10,000 a month. That's my goal. And then once people achieve that, it's like, oh, I can actually increase my level of, expenses and lifestyle. And also look at, yes, how do I create that legacy? And so those are kind of the three stages that we walk people through.
And a lot of that feels you're dealing with numbers and you're dealing with the calculations and the real estate investments, but you're actually holding people's hands as they kind of transform their lives, kind of take on different mindsets. I know when we first started doing real estate investing, the concept of financial independence and certainly retirement felt strange. Retirement is, sitting on the beach when you're an elderly person, enjoying your last few years. And now I've certainly had my mind open in the real estate space to seeing it as the opportunity to dictate what you do with your own time. And a lot of people who are quote unquote retired are still working very actively. When you are working with your clients through that process, what does that look like to them, and how does their mindset shift when they move into the latter stages of financial independence and retirement?
And we're kind of coming full circle with where we opened up on with the entrepreneurial mindset and journey being somewhat of a lonely journey, and it is a mind shift change, right? Because I think that it comes down to time, right? All of us think about time. What do we want? That's the financial independence, is being able to choose who you spend your time with and what you're doing. But it's not. We found being involved in your passion and spending time with that, and so it is an evolution mentally. But most people are in that first stage. How do I cover my expenses, or possibly to replace their active income? There's a lot of different things you got to start thinking about. And sometimes it is a struggle, because if you're a W-2 employee, you don't have to think about stuff that sometimes on the entrepreneur, path, there's no off switch, right? It's like sometimes you're constantly thinking about this stuff. I know that I'm guilty at some point we all are of that. So a lot of it is setting up the systems in place to be able to have a scalable and sustainable business model. For example, if you are self-managing your properties, at some point that will drive you mad. If you own enough properties, you know what I mean? And to really scale, you need to hire and get staffing. Hiring talent and hiring people within our own active business and our portfolio, that is such a key component. And so you're constantly learning stuff as you're going through the entrepreneurial journey. But I think our focus is looking at how to build a sustainable portfolio from the fact that, if you read The E-Myth by Michael Gerber, I think that's one of my favorite books where it talks about like working on your business, not in your business, being an engineer or technician. But that's the journey we take people through and try to educate them on is, how do you build this so you can focus on the overall business and then you can truly enjoy retirement, not just be buying yourself another 80-hour work week.
Mm-hmm. Yeah. And, if somebody's listening to us for the first, and they're having this thought for the first time, which I doubt, but if they wanted to start taking the first steps into moving away from kind of the traditional W-2 job with, 401k investments, if somebody wanted to take that first step, what are some good resources and how can they connect with you to start moving that ball forward?
Yeah. And if they haven't bought their first property, I would say that's step one. Sometimes we all get in the analysis paralysis, and that's fine. Like, there's always something, politics, COVID, interest rates, recession, war, whatever the case, there's always going to be noise and excuses. Like there's always opportunity too. And so I would encourage someone to, if they're interested in real estate, like buy your first property. If that so happens to be via turnkey route, fantastic. If not, fantastic. Just do it. But if they want to learn about my company or connect with our team, we're happy to. We don't charge anything for education. We make our money through the renovation and sale of the properties. But we're happy to spend time to go through and map out your goals and strategy plan and talk about some of the best investment markets. They can go to renttoretirement.com. That's renttoretirement.com. And, learn more about us, look at inventory, schedule a time to meet with my team.
Actually, I want to float kind of one avatar of buyer that we see in our market here. So, we're in Boston, which is, it doesn't come up in a lot of people's hot investment lists, but it's a market where the supply definitely can't meet the demand for housing, but a very, landlord friendly or very tenant friendly state in the first place. We see a lot of people who are looking for the first time, their primary residence and their first time home, and they are priced out of the market. And I think interest rates do matter for this particular person. But a lot of those people now are actually getting an investment property as the first property that they've ever owned. When it comes to investing in investment properties versus, having a primary residence, do you think people need to wait to invest in an investment property until they own their primary residence, or can they jump right in?
A huge topic here. I think you absolutely can own an investment property. You do not have to go down the primary residence route. The big question with that too is like, is that even an asset if it's not producing income? It sure is if it's appreciating, but otherwise it's just on the liability sheet and an expense. But I think investing, you don't have to wait until you own your primary residence. Walking through and evaluating the property, it's really the same process with the additional layer of, okay, let's look at the business side of this and analyze the numbers. A lot of people will buy primary residence and then move out of it and then use that as a rental, right? Or maybe you combined it where you have like a duplex, or you do some house hacking where you rent out half and live in the other half, so you can combine it like we did for our first one. So, but we have a lot of people that live in expensive markets, and it frankly just makes more sense for them to rent than it does to buy a house there. And they have large rental portfolios, right? And their cash flow on their rentals are more than covering their rent numbers. So to each their own, but do not, if you haven't bought a property yet, do not think that you have to buy your primary first before you buy an investment property.
That's actually fascinating to hear. We've always been in the mindset of buy, just us personally. In fact, the office that Rory is sitting in, we own that also because we didn't want to pay rent to somebody else for office space, right? So we looked around a little bit and we're like, screw this, just let's go find somewhere that we could actually buy and own. And that worked out really well for us. But markets like Boston, what we did personally, we traded up a couple times in the city, and we did use the equity as a bit of a piggy bank, whereas a lot of people just want to pay their mortgage down and then say that they don't owe anything on their primary home and they could just be fat and happy. We put that money to work, so we took out home equity lines of credit multiple times. We put that equity into investment properties that are cash flowing properties. We were able to trade up, and then we moved out of Boston. traded down mortgage size wise and double the size of where we're living, and on the portfolio goes. So everyone has their own pathway as to how they do it. But I'm glad that you mentioned the debate of, is your primary home an asset or a liability? It could be either. It's just how you hold it. I've always been under the mindset of my primary home, or our primary home, is an asset, because we're not going to wrap up all our money in it. If it appreciates in value, which every one of them has, we're going to use that to our advantage, which we have.
I love that. And there is such a thing as return on equity, right? And yeah, so and capital to invest is the most limiting factor for everybody. And so being creative with using things like HELOCs to expand your portfolio, just another resource.
It's been a combination of, smarts and some dumb luck. I mean, we ended up in a really good neighborhood in Boston that got really hot. So, I can't say that in 2003 I had the foresight to be where we are today. But hey, part of real estate is just persistence and waiting, and it's being smart, right? And
just taking consistent action. People ask about what's the number one thing that separates people from being successful from those who are not. And my answer is consistency. Because just like to your point, Jason, I mean, sometimes if you own enough property, some of them won't work out, right? And some of them won't be great investments, but then some of them will surprise you 10 years later and just be like, and those are game changers. Just by investing, and you didn't have that foresight, but you did take action, and you just kept taking action, right?
Yeah, we had a previous guest many episodes ago, Pam Hill. She mentioned the lottery ticket value of a property, which I love that term. If you buy enough of them, eventually one of them might become that lottery ticket that, is the property that opens up right next to, a major employer that comes to town, or a new sports stadium, or a hot neighborhood. And there's your lottery ticket right there.
I love that.
So before we get to the final couple questions, I do have one last question, and you got to tell us about those North Dakota winters. Man, they look brutal on the news when I see them.
I tell people I was deployed in North Dakota instead of being stationed there, because it was the Great White North and the tundra. When it snows there, it doesn't melt, man. It doesn't melt till June. That's just keeps compounding. So that's real estate is a different ball game there for sure.
And some of those wind chill maps, my God, when the jet stream just drops down to Texas, I'm just looking there saying, how do they do it? I have no idea. Those are negative numbers we don't even see in New England. But
yeah, you get thick blood real quick.
Yeah. Let's get to the final couple questions. We ask these of all of our guests on the podcast, just as a way to wrap things up and learn a little bit more about you. The first one we have for you, Zach, is if you could get on stage and talk with zero preparation for about a half an hour about any topic of the world, what would that be?
I mean, it's probably all the stuff we've just already talked about, right? I think obviously I'm very passionate about real estate. My favorite topic in real estate, though, is actually tax. We talk about taxes. Our goal is to buy, because we are real estate professionals, buy enough real estate every year to reduce our taxable income to zero via cost segs mainly. But this is, that when we learned about the tax benefits of real estate and how to strategically use that changed our trajectory of our investing and really allowed us to expedite things. So while that is a pretty dry topic for most, I really like talking about the entrepreneurial journey. And to Rory's initial points, I mean, that's tough stuff. And when I hear people that are kind of going through or have gone through positions where I am currently, and that's super motivating. And those are the most influential things for me.
Yeah, that is not a dry topic to Rory and me. We just did our first 2 cost seg studies, and it's eye-opening.
I love it. Awesome.
Yeah. What do they say? It's not the money that you make, it's the money that you keep.
The money that you keep, and then that money reinvested is just like when you actually run an ROI on that. I mean, yes, it's deferred depreciation, but you can 1031 that. But I mean, just a simple fact of like being in high tax brackets and then not paying that money to Uncle Sam and then reinvesting it. That's how you get that snowball, man. That just exponentially grows.
Yeah, they don't teach that to you in optometry school.
They do not.
Second question we have, tell us something that happened early in your life or career that impacts the way that you're working today.
Let me think on this one, because there's a lot. I could jump quickly to a lot of issues that we've had. Let me talk about an unfavorable topic of losing a lot of money into 7 figures. But This is solely from forming a bad partnership and not going through the legal due diligence that I needed to in terms of, funding. So I had a partner early on in our career path. He almost buried our company. And actually, this was a separate company. This was not, but the money I made from rent retirement funded this project. And basically, this was a rehab project, basically a syndication we were co-GPing on, where we had a partner that we had done some smaller scale rehab with, and ended up funding a lot of stuff that the money we funded into the 7 figures was not actually used for rehab, and this person ended up filing bankruptcy, Chapter 7 and 11. And we ended up, just basically getting pennies out of it. We haven't even received that back yet. Years later, it's just chaos. But what I've learned is we jumped into a partnership that was not necessary too early on and did not do our due diligence on the partnership. And partnerships can be extremely valuable, but it's just important not to get into them too early, to have set expectations, especially as you grow. And just do your due diligence on people, going into it. So that is maybe not a super fun topic to talk about, but because of that, in the learning lesson through that, we've been able to form new partnerships that have just been great. One of my mentors always told me in real estate that you either make money or you learn, and that was his way of saying, you lose money, but all those things, the school of hard knocks. I mean, if you apply it. It just allows you to be that much more successful moving forward.
That is one of the best answers we've had for that question. Rory, we need to get into the habit of not asking the final 3 questions in advance, because we didn't prep you, Zach, with those questions. So thank you for sharing that.
Yeah, and we could talk for another hour about, I think, the dangers of not entering into partnerships and the dangers of entering into partnerships, because there are a lot of problems both ways. But I thank you for that answer, because I'm sure that was not, a learning experience, but I'm sure it was not one that you remember fondly.
I will say this though, because of that bad experience, we actually got introduced to other people. It's such a people business, right? I mean, business in general, but especially real estate, it's all networking. We were actually able to meet people because of that changed our business. That we actually made way more money back than we lost. It just took time. So we didn't see the light at the end of the tunnel then, but I mean, it's interesting how it comes full circle.
Yeah, it's wild. That is wild. Final question we have. Tell us something that you're listening to or watching or reading these days. It could be anything in the world.
All right. I'll throw out a YouTube star who's kind of intrigued me recently, Alex Hormozi. I don't know if anyone watches him, but he's just this young entrepreneur that is just really kind of blowing my mind. I love watching his stuff, and I've transitioned like really early on in our career. It was all real estate education, real estate, and then it became more business, and focusing on scaling the business. I really enjoy his stuff. His book, $100 Million Offers, is great. And we follow Bigger Pockets a lot on the real estate and business side. Hopefully that's a value.
I just found your BP profile page. Actually, I saw a video that you shot at BPCon this year. I was also there, nice. Were thousands of people. So I'm not surprised that we didn't cross paths.
Well, we do a lot of advertising with them too. So you'll,
I was wondering why you were in their podcast studio. Did you have access to that because you're an advertiser?
No, they didn't, because they were very particular about the guests. Like, you can't buy podcasts with them. They wanted to be very just organically education based. What we did there, and that's just, I began to know some of the hosts there and, collaborate on different stuff. And I was able to sit in on a rookie podcast. We did a live rookie podcast recording there. So that's what we use the studio for. And actually we were able to use it for some of our own recording as well.
Yeah. I love that podcast. I saw one of the hosts. What's the woman's name that's the host? Do you remember?
Ashley.
Ashley, yeah. Mm-hmm. She was also in charge of one of the panels there that I sat through. So
awesome. Yeah, that's great.
Rory, why don't you bring it home? I shouldn't be talking right now with this voice that I have.
So I just want to, before we depart, if we mentioned it earlier, but remind our listeners where they can find you and reach out to you.
Absolutely. Best place is to visit our website, rent2retirement.com. That's rent2retirement.com. That has links to all our social media. 800 number is 800-311-6781. But yeah, I mean, we got a ton of resources out there. Our goal is to add value to anyone that comes in our community. We're all active investors here on the same journey. We do a lot of short-term rentals and commercial and multifamily and single family. So please reach out, and we'd be happy to schedule a time with anyone.
Well, thank you for joining us, Zach. And if you're looking for Jason, you can reach Jason at nexthometitletown.com. His voice will be backed by the team. You hear this anyway, but you can send him an email directly there. And if you're looking for me, Rory Gill, I'm available through my law practice, Urban Village Legal. That's urbanvillagelegal.com. And Next Home Titletown, my brokerage. That's nexthometitletown.com. Thank you, Zach, for joining us on the podcast. And thank you all for listening.
Thank you.
This has been the Real Estate Law Podcast. Because real estate is more than just pretty pictures, and law goes well beyond the paperwork and courtroom arguments. We're powered by Next Home Titletown, Greater Boston's progressive real estate brokerage. More at nexthometitletown.com. And Urban Village Legal, Massachusetts Real Estate Council, serving savvy property owners, lenders, and investors. More at urbanvillagelegal.com. Today's conversation was not legal advice, but we hope you found it entertaining and informative. Discover more at realestatelawpodcast.com. Thank you for listening.